Ladies and gentlemen of the crypto space, we're live on a Friday, June 27th at 11:06 a.m. We're at the end of June. Obviously, that is a big deal. It's July, which is we get to July 4th. It's a very patriotic day. It's really the heart of the summer. June is kind of end of the school year, whereas July is the heart of the summer. I think interesting things are going to happen in July. That's just me personally. If I was a speculator, that's a decent speculation. Um, Fortunately, I don't need to speculate. Fortunately, I'm going to own through the heart of July, which I expect to be good times. I expect at some point this year we're going to see very interesting times because that is what the calculation requires. There's no other way for this system to actually make the math. For the equation to balance, a bubble must be built. And that's my official opinion, ladies and gentlemen. I was looking at RAC for a second, but I like this opinion of mine right here. Um, the crypto space is so important because they need another bubble. In 2001, 2, give or take, after .com, they needed a bubble, and their chosen bubble was real estate. It went absolutely parabolic with regard to deregulation, the ninja loans, and all their derivatives were the talk of the town, the bee's knees, until it blew up in their face. And then post '08 to 2010, for about a decade until 2020, really until like September 2019, when things started to get out of hand. There was a bubble in the equities markets, United States stock markets. Now, if y'all didn't notice, stock markets at an all-time high. Um, You think they're going to really do a bubble in the equity markets or the stock markets? I mean, it's not up to them really necessarily. Bubble forms, but that's what regulation is for, because regulation is a part of marketing slash incentive systems, and they affect decision-making capacity of the majority. So, how do you get a bubble to form in somewhere other than the stock market? All right, you set the regulatory situation such that that occurs. And it just so happens those are the headlines. And that is what the administration, that's what Congress are doing, setting the stage for a bubble outside of the equities markets. I mean, look at this S&P 500 all-time high, crazy. Imagine buying in 2012 after the dip in 2012. Oh, that was such a big dip. Hey, remember that dip in 2020? It was relatively small compared to where it is now. It's literally the S&P is. Can you believe that? It's gone up 2x, well, 3x from where it was, now at give or take 62. That's crazy since the bottom in 2020. At least doubled in value since pre-crash 2020. Wow. Is that a crash? What's a crash? Because that doesn't really look like a crash to me. Crash is a redistribution of capital, but this market quickly absorbed that capital right back up. That's always the question, folks. Where's the capital heading and why? Because if this goes down, where's the money going to go? And historically, that was the United States bond market. That's exactly what we saw in 2020. This going down means it's getting bought. So this got bid as the stock market was selling off. This market was rallying. So this right here, ladies and gentlemen, this wasn't a bear market. This was a bull market for bonds. So there's always a bull market somewhere. Now, obviously, the talk over the last years has been the changing of the relationship between U.S. government debt as risk off for U.S. equities. So things have changed. Things are continuing to change, and this is like a Luke Roman type of conversation with regard to gold being new reserve or being thought of increasingly popular as reserve compared to the dollar, which doesn't really change the structure of the system because of the amount of dollars required to service global outstanding debt obligations. And that's Brent Johnson talk. Yeah, as much as Luke and Brent never really got along, or Brent liked to really poke Luke, they always told the same story. And they're professional enough to know that they always told the same story. They always did. Everyone tells the same story. It's all the same story. They're just looking at it from a different angle. Anywho, lackluster price action in the crypto markets. Obviously, this has been a relative risk off the last week or two, give or take, since I ran, which is about a week, and down to 50 cents on curve. Arrow back down to 76. Looks like that 60 cent buy by the captain was a decent price. We'll see how well this level holds. Not really at a level. It's at nothing, in my opinion. Maybe go down to the weekly. There's nothing here. This is just below resistance. I think that is a decent resistance level to inspect, especially from a monthly standpoint, because that's where you have last month's close. So we'll see if we get above it in on, was it the weekly? Oh, it's the 4 hour. Where the hell is that? I don't have the MAs up. I have guppies on. Yeah. Yeah, so the 50 SMA on the daily has shown to be a decent resistance level thus far. Clearly the 100 as well, but this combination of two MAs over to the weekly, nah, yeah, fine. The 10 SMA on the weekly, that was to the tick pretty much on this shooting star, so that is a bit of a cautionary tale for a trend reversal. But the follow up isn't half bad. You're above. You're currently a bearish candle as a follow up, but you are above the open of the previous month, and there's only 2 days left. It's not like it's a bearish engulfing, okay, where it would be below the open, somewhere down here, 73 cents. Um, but we're not that far away. So at 76 cents, it's a cautionary tale, especially from a follow up candle, and candles matter, especially from a weekly candle standpoint. That's meaningful. Anything from a monthly, nothing interesting from a monthly other than a rejection at a pretty meaningful level, which is further confluence suggesting uh, caution. Curve below the 10 SMA and the weekly, cautionary tail. That is a long way to go to next levels of interest, in my opinion. I mean, maybe 45 to 36. This is an interesting region right here. There's nothing but air. I mean, maybe in the reason to have support here. This is, gosh, some interesting levels here, some interesting congestion with this most recent inverted head and shoulders, which is more visible on the daily chart. It's a nice inverted head and shoulders, but those are daily candles. Daily candles will drive you nuts. Who the hell's looking at daily candles? I like these. I like this inverted head and shoulders, but so that would indicate that maybe we probably find some support, at least above the neckline, at least which is about 36 cents. And then there's a bit of a spread, maybe between 31 and 36 cents. So you get down to 31 and 36 cent level, and you're like, all right, fine, this is going to take for consolidation and accumulation. That'd be very disappointing if it gets down there, but we'll see because total seems to be in a decent position. Let's take off some of our drawings. Let's look at some MAs. Okay, we ripped into the 100 on the daily. So it's clearly the defensive. It's the rolling tops that we see across many charts with the lower highs. So you get your symmetrical triangle type of pattern. Um, So this doesn't really indicate too much. This thing could either break to a local higher high, but you still have to get back above your local highs. Um, that's a fair bit. That's 300,000 on 8. That's a 35, 40%, give or take. Um, so there's some work to do. Let's go out to the weekly. I mean, that is a hell of a level. Look at that. 1,122 bill. That was a heck of a level to breach because that goes back to 2021, ladies and gentlemen. Are we above the 10 SMA on the weekly? No, we're below it. Structurally a decent inverted head and shoulders. Decent. Got some breaches to the downside, but they're just wicks. I mean, this is not horrible. Doesn't mean much because what? Just, I don't take too much stock in like these types of trend structures. Like I would be much more comfortable if we were above the 10 SMA. Up at 845 instead of 809. But we did have last week's breach below, meaningfully below 10 SMA. So this is uncomfortable or increasingly uncomfortable as compared to being above from a moving average standpoint. An inverted head and shoulders is not too comforting. Um, Bitcoin, I mean, this is the Bitcoin chart. Everyone out there is crazy. Everyone out there is crazy. I mean, look at this thing. I'd rather own this than the S&P or Nasdaq. I mean, look at that. If Nasdaq or S&P are going to do what everyone thinks they're going to do, this is going to do. It is doing that. Look at this chart. Oh my dear, 106.6. What a wild number. It wasn't too long ago as the ETF launched at 47, and immediately after the ETF's launch, it crashed to 40, and now it's at 106. And folks are out there saying whatever the hell they're saying. Absolutely insane. This thing is just destroyed. Velo, unfortunately, it is what it is. Gold 32.72. But bear in mind, you know what's constructive? The DXY. You know the deal. You know what we look at, ladies and gentlemen. And then if we even want to get even more excited, we throw on the guppies and you go to the weekly and you got some red guppies. You casually throw around chart data. And this is how many years? This is going back to 2017. It's really 2016. The story for crypto was 2016, 2017, and that was your quote unquote bull market. So to me, this has always, phoned home as the most interesting presentation from a pure uh, technical perspective and indicators, just boilerplate indicator, not much interpretation because it's just a guppy indicator, and that is a relatively known indicator at this point. So you throw some guppies on the weekly DXY and you're like, all right, what does it show me? It shows me red guppies in 17 heading into 18 and then 20 heading into 21. What were those periods? Those were your bull markets in the crypto space. All right, great. So what do we got going on right now? This the red guppies. Now it takes some time to kick in, so that's exactly why the rest of 2025 is interesting. Now, folks are always like, when does it end? There's no end. There's no bull markets. Why? Because that's the contrarian reality. Everyone out there, everyone talks about bull markets and bear markets. And what do we know about the quote unquote everyone? Who's everyone? The majority. Everyone's always wrong. The way they think is wrong. Everyone fails, mostly. Most people don't succeed in speculating, investing, and gambling in the stock market and crypto markets. Most fail. So I invalidate the idea of bullishness and bearishness. I don't care. That's why I have my three rules. And that is my modus operandi. That's how I engage with these markets. Three rules have nothing to do with bullishness and bearishness. So there is no end. There is no, ooh, I got to get in and then I got to get out. To me, that concept is so normy. It is so general population. Like, like I got to, it's like it's toxic. It's like this stuff is toxic. And that's the false um, impression that crypto gives because of meme coins and debauchery and exuberance and just gambling and greed and stupidity in many regards. And that's not what a lot of a lot of the software is. Maybe it's because I'm a software engineer and I understand what it takes to make a software product. And then you couple that with the fact that this is dealing with money, which means these software products need to be perfect. Otherwise, you get incidents like Resupply did that. And all it takes is a couple of characters to be wrong to cause an invalid state or whatever the hell, reentrancy. And that allowed shares to not be burned, yet redemptions to occur, or whatever the hell the ultimate bug was. So maybe it's my career in software that allows me to appreciate what the hell these engineers have built with regard to the protocols that are successful. To such a degree that the protocols that are successful aren't protocols, they're businesses because they have the characteristics of a business in software form. And I hang my hat on that reality, just like I hung my hat on my career. It's a good choice for a career. It worked out well. Man, I was a shot in the dark too. Strange how things work out. It's been a very strange career. My 30s were, I can't believe my 30s are gone already. I'm in my 40s at this point. Blink of an eye, those 30s. Did have two kids along the way. Anyway, I'm getting all nostalgic on you guys, thinking back on life. I guess that actually gets weirder as you get older, 50s, 60s, 70s. Now you really start to think back on life. Anyhow, um, so that's my 2 cents about crypto. So here's why nothing changes with regard to my sentiment. Just excited as I always was. CryptoSars, David Sachs says July will be a big month. All right, great. That's just a hyperbolic statement. But here, it's literally they just passed the Genius Act. Now they got HR 1664. Oh, come on, come on. And then what? Fannie and Freddie got to take crypto assets into account with regard to, you know, access to capital and resources. Listen, you got 100 grand in crypto, and you got to prove that you have capital to be able to put a $20,000 down payment. Fine, that'll do it because you could sell 20 grand worth of your 100 grand worth of crypto to pay your down payment, and that's a part of the underwriting process for these centralized lending businesses that they call banks. So that is very interesting. And then to couple that with stuff like this. Um, Commerce to promote blockchain technology. Now we're talking because now the government is about to pass a law that boomers must be shelled, basically my bags, because those are the types of businesses that I've invested in, the stuff that they would shell to boomers. Not like they're showing meme coins. Peanut is not getting shilled to boomers as an investment. Okay? for, for all those dumb people out there in Solana that think their magical peanut or whatever meme coin is popular is going to get shilled to boomers for some reason. No, boomers are going to get shilled businesses, businesses that will give them a dividend or some sort of cash flow, because that's what boomers want, and that is investing. So in that regard, boomers will be right again. So it's up to the few of the subsequent generations to be like, oh, that's what they're going to buy. So to me, it's obvious. To me, cash flow is what everyone's after. Why? Because as you get older, you realize a lump sum doesn't do anything. I just got done talking to my manager about this concept. I don't want lump sum options payout and whatnot. No, I want cash flow. Just give me, instead of 100 grand, give me an extra 2 grand a week, because I could bank my life on 2 grand a week. You get 100 grand. What the hell are you gonna do with 100 grand? You're gonna buy a car, or you're gonna pay off your mortgage, or you're gonna get a mortgage for all I fucking know. So the point is, I much prefer cash flow over lump sums. That's me. Now I understand a lot of people will be like, "That's stupid. Get the lump sum because then you can make decisions." It's too much information. I want to think about other things. So I appreciate the cash flow. So for instance, like a lottery winner, I would take the cash flow rather than the lump sum. I'm that kind of guy. So that gives you a sense of my mentality. I prefer lifestyle, health and wellness, mental well-being, and that to me is manageable within the realm of cash flow, not a lump sum of capital. You don't need a lot of capital. And that's what I've always told you guys. You don't need a lot of money. You don't need a giant bank account. You don't even need a lot of investments, but that's another story. What you need is cash flow. You need your investments. That needs to be good investments that produce good cash flow and that grow along with inflation, because as consumer price inflation goes up, what you want is your cash flow to be sensitive to consumer price inflation. Okay. Um, Stablecoin supply 252 bill. So this is DeFi Llama statement. That's more. It's There's more to the story. It's not just 20x in 5 years. Because in 2019, I don't care how many stablecoins were in existence necessarily. What I care about is how many stablecoins were available in liquidity provision, and that was Uniswap V1. There was nothing other than Uniswap V1 in Q4 2019, and there was about a $500,000 in liquidity. So it is more like not a 20x, like a 500x in liquidity. Okay, something like that. Didn't we pull up the Uniswap V1 dashboard at one point? Swap V1. I want the documentation though, not the contracts. There's history. Maybe is there with a website? No, I want Uniswap V1. How do you see this? November 2018. Wow. And it will exist. It's still there. That's really incredible. I like that. Uniswap did a lot of things right. Let's see. Eh, No, it's not. It's not finding exactly because I've done some posts on this. I hate advanced search. Um, Maybe. Yeah. There you go. 1,451% more dollar liability, and that was back in 2023. Is this the Uniswap V1 dashboard? Yeah. December. Okay, maybe there's more liquidity. But that wasn't, that was TVL. So if you, this was a good post. So if you take the number, what did I write here? Dollar liability is only a fraction of TVL. So overall Ethereum liquidity from 2019 to current has grown 264,664%. I think the statement was like, or the thought was a $500,000 worth of liquidity, give or take. Wow. Yeah. The 1451 comes from Coin Market Cap. Anyway, I wish I could find Uniswap V1's website if there's. I'm sure it's still online. Sure, it's still online. Explore? No, no. Transactions? No. There's Annabeth. Nothing. I'm wasting my time. I want their metrics. Come on. Pool? No. Explore? Tokens, pools? No. Where's their old analytics dashboard? Anyway. All right. Fine. Fine. All right, let's do some commentary. I got a 12 o'clock meeting anyway. Greg, much pleasure. Good morning. Arrow, hello, my friend. Thoughts on resupply hack and follow through? Um, I don't like owning things that get hacked. That's a stupid statement. I know. Um, have I owned anything that's gotten hacked? Yes, I did. I owned Prisma, but I didn't buy Prisma. I farmed it, so it was a free bag. I own Bancor, so that obviously got Celsius, so to speak. But yeah, I guess that wasn't even large exposure though. I never really owned anything that got hacked or rugged, so to speak. And I didn't own Resupply. So that gives me a bias of like, all right, it's what it is. It's unfortunate because Resupply did very nicely for CRBUSD. Uh, I like the commentary I hear. I tend to be an optimist and I'm positive. I'm not a hater. So I like what I see. I like the repayments and I feel bad because you got to cough up personal money to account for a software malfunction. But that's clearly an expression of someone who's put vested interest into the software that has been written. So I got some empathy from a software developer standpoint. Um, they clearly don't want it to lose any momentum, and I hope it doesn't. I hope it does okay. It obviously is a meaningful part of the ecosystem. Deserves to get a good rally. Obviously, the weekly perspective is not pretty to look at. Um, Could rally from here. I mean, that's a decent low. I would neglect those first two candles. That's a lot of noise. And this has been a lot of depreciation coming in 7.5 mil market cap. It's a pretty good interest rate. So everything's functional. It's not like, you know, that's why time in the market is what reduces risk. Because as long as it works, that's all that matters. So if you go over to resupply and you go over to our sub, it's not 89, 90, 89%. All right. Not bad at all. There's still a lot of money in there. Right. That's my 2 cents. I have uh, executed rule number two. I know when to stop buying assets, and that's not necessarily dependent on market conditions. That's dependent on my overall personal situation, familial situation, and capital management situation. I have no more capital to buy the things that I may want to buy or extend out on the risk curve unnecessarily. My last acquisition was Arrow. I look forward to July 2nd for flight school distribution. That's what I'm thinking about more. Um, I think there's some questions I could come back to things that I'm doing with what I own. How would that work if you have 100K, to use your example, but it's a V33? Wouldn't count, but would historical cash flow be taken into account? What was the statement I was talking about? That's why when I get to comments, it's something I mentioned earlier, and I don't always remember what I was talking about. Um, what was I talking about? Anyhow, if you want to remind me, I'll touch on it again. Killis, good morning. Much a pleasure. Anisette, good morning, Cap. Just would you invest in a pure lending protocol? Yeah, that's a good business. It's a bank. It's a credit protocol. Just a crypto business, or do you like to be combined with others? No, a business is a business. The problem is a business is a business is a business. If you're going to buy a lending protocol, what's the difference between Aave and Compound and yada yada yada? They're all lending protocols. They're all the same thing. So it's the same thing as like 20% is 20% is 20%. Interest is APR is APR is APR. So you might as well just buy the most risk adjusted APR. So it turns out that Aave paying percent on dollars. Fine, I'd take the 10% on Go. It's paying. That's it. Okay, so there's your lending protocol, and here's your insurance pools. And if you're going to trust a lending business, I'd want to trust like an Aave V3, and you got V4 coming. That's pretty cool. Where's I look forward to V4. Obviously, V3 with massive upgrade from V2 with the isolated pools. It's big stuff. And those insurance pools are looking pretty appetizing. My 2 cents. Asun, good morning. Always a pleasure. What the heck was I talking about? Good morning, Captain Prinze. Prinze Rise. Good morning. Arrow, get back on and tell me what I was talking about. Um, where is look forward to flight school. I mean, this thing just is got to be interesting. Flight school. Let's see what it's paying out. Clearly 25%. It's down to 44%. It was at 52%. It was at 55%. Down to 42%. That's going to be a nice little payout. Okay, that's what I want to look at. Henry, have you or anyone in the chat seen anything given the ability to lock curve and get rewards on non-ETH chain? Yeah, locking's everywhere, but the concept of locking is only part of the equation. Why would you want to? Why don't just get curve? Why would you only have to do it once? And transactions are like a $2 right about now with the way Gwei is, whatever Gwei is. Why not just go on mainnet? What's the difference between like base chain Arbitrum? I don't know. Especially with like I mean Convex is all snapshot voting. So that's all free. That's gasless voting. And and even VECRV is all you have to do is claim every 6 months. So every 6 months you have like a what $10 transaction fee. All right. So I don't know. I wouldn't forego the best business for another chain. Why? What's the matter with mainnet? I mean, mainnet's only getting more and more efficient, and frankly, mainnet's where all the businesses are. You guys know the deal. If you go over to stablecoins, borrow here, stablecoin. Yeah, but don't claim. You got 6 months. You don't have to claim for 6 months. I don't know. That's my 2 cents. Yeah, but it doesn't help. It's so my overall portfolio is the opportunities that I've seen on different networks, different markets, mainnet, Arbitrum, Optimism, Base, Cosmos hubs. Still have that exposure. Um, Solana, and there's that's we've already taken like what are you gonna get? Is it like Grail or is that still the most popular? Let's see what's going on Arbitrum. Let go over to volume, text volume, Arbitrum. Damn, Uniswap in the lead, big time. Fluid, Camelot comes in at 4, and Ramsey's down at number 5. Uniswap, go figure. 389 mil in volume on Uniswap. How is Uniswap taken over so strongly? All right, so let's put it this way. Of a locking implementation that's good, what's what's available? Uniswap has nothing. It's uninvestable. Fluid, uh, INF, Insta D app is the token. You don't get the cash flow. There's nothing to invest there, in my opinion, other than speculative price appreciation standpoint trading. Pancake swap, whoopie do. Camelot, all right, fine. Camelot has always been intriguing. Camelot, along with like Trader Joe or LFJ at this point, those have always been considerable. I think I've had positions in them over the years. But Ramsey's, all right, fine. I still like the VE33, and that's Ramsey's. Camelot's not VE33, Pancake not VE33, Fluid nor Uniswap. The only one here is Ramsey's. That's your VE33 at the top of the list. And that has been taking a fat hit. So, yeah, that's the ability to lock. And that's what I gravitated towards, the VE33s. I always liked that concept. And it made sense to me. And a lot of people hate on it, but guess what? If it gets monetized 100x on the money by 2030, then all of this was a good investment back in 2020, 2021. Simple as that. So as long as you're right in the end, that's all that matters. And I speculate that I'm right in the end, or I will be right in the end, that these were good long-term investment choices. So you clearly have Velodrome on the optimistic super chain, Aerodrome on base chain. There's nothing investable on Solana, in my opinion. That's just a hot garbage heap of um, pump.fun circle jerk garbage. So it's not investable. There's nothing investable. Radium's not investable. None of that's investable. None of it pays cash. None of it, like solve rate. None of it would be like that. That's what I want. But I won't have to buy it because we'll eventually get an airdrop if they ever launch. Because all they do is shit talk. Mace, yeah, solve retweeting this. It's basically bullshit. There's nothing to invest in. There's no business. You got to understand, what is the point of borrow? What is the point of credit? It's not to buy a meme coin. It's not to go long on Bitcoin. That's not the point of any of this. This is infrastructure where I could take $250,000 worth of Bitcoin and borrow 100,000 US dollars and put a down payment on a fucking house because I'm a human being and I got a house to support a family. Or I want to buy a car and I need like 5 grand for a down payment. I could borrow capital. That's what credit's for, not for fucking gambling, not for degeneracy and whatever people think the crypto space is for. So that's why these capital rails are so important, to be able to take USDC and put it on a debit card, to be able to go to Spritz Finance, which I talk about, and transfer capital to a bank account in very quickly, same day, if not instantaneously from a different provider. Because different providers may have instant Fed now integration. So nothing on Solana to invest in. I'd be the first to say there is, if there was something that was interesting. I would hope these guys come online, and I hope they're good because there's a lot of shit. For instance, Sonium did nothing. Sonus did nothing. I mean, fuck it. It's a optimistic super chain. So Velodrome's on Sonium. So whatever this was doing, I'm gonna close that. I don't need it anymore. We'll see what comes from Astar. That's interesting. SwapX turned into absolute dust. We'll close that. There we go. Let's see what the payout is on Cleaver. 11.88%. That's cool. I own 2.5% of all voting power on Cleaver. So if there was a big vote right here in governance, I could pretty much pass it by myself, which is pretty cool. Oh, kill emissions for a broken market. Should probably vote for this. Probably vote for that. It's nice if the votes are signature driven. Very nice. Damn, a lot of votes. I put in 20 for so these are the big boys. And that's obviously where do you see that? You see that here. Yeah. Let's close this. Close that. Where's the top list? No. This is dead. DeFi Wars. Cleaver. So who's the top owners? You probably needed oh. There's KMET's vote. That'll do it. KMET's coming in with 21 mil, which is how much is that? It's about 4 times what I have. 21,000. I have the 5,000. Okay, top list. One, the multi-sig. One, two, three, four, five, six largest holder of Cleaver. Yay! That's cool. Cleaver. Anywho, I digress. What the hell are we talking about? Um, yeah, it's pricey on mainnet during a bull market, so I don't know. Invest accordingly. It's like the cash flow might not happen now, and you might not be able to compound now, and you might just have to DCA. But mainnet's where to own anything. That's where all the money is. That's what I was going to show it. Go over to stable coins. I got 10 minutes left to the stream, and I got to run. Stable coins. If you go, there's 252 bill, but if you go to mainnet, there's 125 bill. That's where all the stable coins are, aside from like Tron. I mean, Binance Smart Chain, 10 bill. Solana, 10 bills. Wow, Solana's about to flip BSC. That's crazy, by the way. Base is only 4 billion. There's nothing. Uh, Literally, Ethereum has more dollars than every other chain combined, pretty much. Obviously, if you neglect Tron, because Tron DeFi doesn't really count. So if you definitely neglect Tron, Ethereum has more dollars than every other chain combined. Combined. And these are small numbers. You're talking on $3 billion. You're talking even on base chains, $4 billion. Solana is literally $10.45 billion of people circle jerking each other on Bump.Fun every second of every day. That's crazy. Um, a billion on Silly, a billion on Avalanche. These are microscopic compared to Ethereum. So the real investments, like the best investments, the investments that the boomers are going to gravitate towards, are likely on mainnet. Now, bear in mind, you go to Aave, um, and that's the whole point. It's like this whole one protocol cross chain concept, seamless cross chain. I've talked about this for some years. You go to Aave, there's a lot of markets. They're everywhere. Base, Optimism, Polygon. I mean, there's a lot of chains. That's the same thing with Curve. That's the same thing with Stargate. That's the same thing with a lot of protocols. You can own Stargate and Layer Zero on any chain. They didn't enable the fee switch for Layer Zero. I wish they did. Maybe it would have been investable in my terms. Um, but for instance, like Aave or Curve, that's mainnet. So sometimes the best investments just are more expensive or more expensive to manage. Just is what it is. Convex. I mean, convex is. I don't. Convex is a decent, even in a bull market because it goes through Vodium, so it doesn't cost any money to vote on Vodium. It's snapshot based. So I don't really see the inhibition to want to get exposure in consideration of mainnet. This doesn't cost any money to vote. It costs money to claim, which means you could wait for lowered GWE activity, which is cyclical. It comes. Or frankly, Arrow or Velodrome, which is compound voting with the VE Velo Maxi, 32%. I mean, these are unheard of numbers. These are insane APRs. And we see this kind of, range bound price action, and we're at the bottom of the range. And both of them are very similar because this is always the first leg of these types of charts are misleading. Um, but check back in like 10 years, in my opinion, we'll have different ranges. I've showed these charts before, where like on a velodrome, you go above the range, and then you have a new range, and then in a couple of years, you have a new range. These are shitty drawings, but the point is, you go up and down within range, and then you get a new range. Okay, so that I think that is my speculation for the way these types of emissions assets play out. And frankly, that's the same thing with Curve. You just go zoom out, and you have this range bound with a previous high at 22. All right, so it breaks out. I don't know about it. This is a log chart, so it's probably not the best example. All right, I'm not even going to draw that because that's up at 120. All right, so you're range bound, and then you collapse to $5 from like 20 or $25. And then you're range bound, you're up at 40, and then I don't know, something like this. And notice we're heading into 2030. It's a long time between now and 2030. We're in 2025, and maybe this is actually a decent drawing. That's actually quite a decent drawing. It'd be nice to see it at $20 at a high, and it collapses 75% to $5. That's my 2 cents. And then from $5, you get your bull market heading into 2028 at $40. All right, this actually it's actually not a bad drawing. These types of numbers are like, all right, this kind of makes sense heading into 2030. And then it collapses to 20 from 40. Damn, I drew this pretty good in my opinion. It's funny. That's actually quite funny. Um, my man, hope it helps. You're talking about Fannie and Freddie recognizing crypto assets for net worth. Oh, you said, how would that work if you have 100K to use, for example, but it's a V33? No, the odds are they're going to be very selective of what kind of assets have different kinds of quality, therefore have a different weight, contribute different different degrees of meaningfulness to collateral. That's all that means. Very don't accept the blanket statement from social media saying, "Oh, they're going to take crypto as collateral." Yeah, they're going to be very selective of what kinds of crypto are collateral, or what kinds of crypto have a collateralizable value to them. That's it. Thoughts on a VE33 expansion to mainnet from Drone Team? Come on, baby. I would like to see Velodrome on mainnet because it's not coming from Aerodrome. Aerodrome is a one-off for base. That'd be nice. Um, okay, so super chain voting. They expand to mainnet. Um, you're still voting on optimism. So it will still be relatively cost effective. I don't know how that plays out with regard to mainnet. We currently provide like dust, WETH, for superchain voting on optimism. I don't know if that stays the same if mainnet is selected for vote. I don't know, but I think that would be a reasonable expansion. Why not? I'm sure they're working on a lot of things because you know, we get the cash flow that we get, but those boys are large owners because they bought early, they got their initial positions, the team, optimism. There's a lot of cash flow between base and velodrome for the enterprise itself, and the developers themselves. So I'm sure they're doing very interesting things. I look forward to see what they come up with in the midterm and the long term, obviously. Let's wrap it up for today, ladies and gentlemen. I appreciate it. I'm probably going to be taking some time off next week, decompressing a little bit, certainly sitting in a sauna. So do yourself a favor and find out how to turn off your anxiety, find out how to relax, find out how to stop. You look at the market. You got to understand what's going on in the market, but you also got to understand that the vast majority are wrong. The vast majority look at things wrong. And they need to have a different philosophy. So I see, volatility. Oh, Bitcoin crashes to 80K, 70K. I own Bitcoin. Fuck am I going to do about it? Serenity now. And follow the rules. That's why I define the rules. If I follow my rules in 2030, I'm going to be fine. I'm going to be good. I'm going to have a more valuable portfolio, at least nominally, and hopefully inflation adjusted as well. And I expect the cash flow to go up in time as well. Up, down, up, down. Stop driving yourself mad. Execute rule number one, own more assets. And cyclically, know when to stop buying assets, depending on how much capital you have available. Thank you, Killis. I appreciate it. It's hard to relax, but I'll give it a whole. I'll give it a shot. Um, yes, it is very hard to relax. I appreciate that, but um, we all have to set goals and and achieve them. So figure out what you need to do to find the peace of mind, to let time pass, because the only thing that's between you and everyone and success is the three rules and time. Own more assets, and in time, if you make good choices in your due diligence process, they will be more valuable in time. I mean, literally, the United States government's passing laws such that the assets we talk about will be more valuable in time. To me, that's extraordinarily comforting. Friday, June 27th at 11:59 a.m. 381 people made it to the end of the stream, and you are all now that much more rational because of it. I wish you all a good weekend. Stay calm, cool, collected, and I will see you guys as soon as I can, likely in a week or so. Till then.